Hey, what is going on? What's going on in the hood? Holla. What up? What up? What up? What up? Hey, Darrell, what's going on? Good. Good to see everybody, man. We got things to do. How's everybody's day? I'll put my face serums. I just got out of the sauna. Woo! Gotta use a little face serum if you want to keep it together. Hey, Vish, what's going on, baby? My man. Kush, what's going on? I'll see you in 1 hour. Yeah. Did you get some shreds in today? Hey, Mr. Jack, what's going on? Kunal, how you doing? Hot damn. All right, let's get to work, man. We got things to do. Yo, JC, what up, baby? John Law, the long arm of the law. What's going on? What's going on in the hood? Well, hot damn. All right, let's do what we do, which is the do. I don't think Levi's on holiday. I saw him trading in the chat room. He had a lot of alerts today. Oh, Susanna. What's going on, baby girl? Yeah. Levi's always at it. Even if he's got stuff to do, he's moving around. When he's probably got like 8 kids, 50 cattle, probably a lot of guns. He's a busy dude. All right, cool. Let's get to work, people. Let's get to work as we always do. Armando usually does the Wednesday huddle since he is on vacay. I think he's driving back from some national park with all his brood of kids. I shall stand in here and do what we got to do. Hey, Damien, what's going on? How you been? Cool. Let's first take a look at the market indexes. So as always, when we have like these kind of days, we had CPI yesterday, then the Fed was today. Now, these things are usually just nothing burgers now. What I mean by usually these things are nothing burgers now is like, things like CPI, PPI, the Fed, like these type of things, they're huge events like in bear markets, but when you come out of the bear market, the impact in the range of the day lessens significantly. So like if you were like thinking, like in the past, when we had like when the Fed would announce their rates, like we'd have huge spikes, like 2% up, 2% down, and you'd have all this kind of volatility, and you'd have double Lutsies and shakeouts all over the place. Now we're not really into that situation because we are in the good old fashioned bull market. You can even just tell by the amount of stocks just ripping nonstop that the price action has changed. And every time you're getting essentially dips in the market, they're getting bought up, and so that's your telltale sign, right? In the end, the price action is the thing that matters the most. And when you start to see anytime you get these like intraday dips, they just get scooped back up. That's a really, really good sign of the price action in the markets. And so we've got a lot of good things going on here. And you can just see, if you really think about it, like we haven't even breached, since we had a breakout over here, we haven't breached the 9 EMA minus this particular day for a hot second in a month. So this is just trend trading at its best. So when you are in a market where you are riding up the EMAs like this, and you're getting very, very little pullbacks, these are the times that you really want to put the gas on your trades, meaning that you can take on a little bit of extra risk, or you can increase the frequency of your trades, by taking more trades. But beyond that, you want to be really looking at the most explosive names and the most explosive types of charts. and start looking for themes, because, we haven't had those in 2022. There wasn't any themes. Like the market was just kind of fading off and grinding along, and tech stocks were essentially fading. That was the big theme, right? But now we're starting to get into like all sorts of other things that are happening. So overall, like this is a good sign. Now, on a short-term basis, you can see like we're really getting pretty overbought. We're at a 97 stochastics, which is, getting up there. But markets can stay overbought for long periods of time. What I mean by that is like, if you ever look at like periods in the market where you hit like overbought readings, like you can see here, like we were overbought for, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks, right? You can trigger overbought readings for weeks or even longer. So when you have a range-bound market, things like overbought and oversold matter a lot more, because like you're going in a range and you're ping-ponging around back and forth, right, inside that range. You're getting overbought, hitting resistance, getting oversold, hitting support. And so like you're kind of ping-ponging around. So all of a sudden, like overbought, oversold, like these kind of things matter a lot more. When you are in a pure trending momentum environment, right? And this is one of the stronger trends we've seen in at least in the last year. When you're in a pure trending environment, an overbought reading is actually a good thing. Like you want the market to stay overbought, because it's telling you the risk is on the table and these things can go a lot farther than you think. So don't worry about, overbought, oversold. When the markets start to trend like this, they can do this for really long periods of time. And so like, as long as the market is not showing any signs of weakness or breaking down, you're not seeing anything underneath the hood, you don't want to overthink it too much. Like you want to keep taking the shots till essentially the market starts to show some turbulence underneath the hood. And we haven't even seen that really, minus this one day. We have not seen that at all. And so one of the cute things that often happens when the market gets overbought is, we start thinking we got to short everything because we have a recency bias of this last bear market, right? We have a recency bias of the last bear market where if the market went up for 3, 4, 5 days, like you'd go on these runs, you'd come right back. And, we've had these kind of big rallies before, but then like you'd fade off, and you have these rallies and then you'd fade off. But this period of the market is over, right? And so now we're in this kind of like bullish trend. And so you don't want to overthink this and like start thinking like, wow, this stock is up a few days in a row, I've got to start shorting it. That matters a lot more when you're in like these kind of ranges than it does like when you're riding totally up your EMAs. And of course, at some point, things will get really frothy and will snap back. But like that doesn't even mean that you're going to snap back for more than a few days. Like until that evidence shows itself, you don't want to really overthink all of this. And so we're up like 5 days in a row, and really we're up like 10 out of the last 12 days in a row. But like so far, like we just haven't seen the signs of it. So should we get at some consolidation or pullback at some point in the future? Yes, it could happen very soon, but it doesn't mean that it's going to be like you're back into the bear market trading where the markets are crashing and you're getting all into this. So if you're looking at the QQQs, like one of the things to just kind of be mindful of is, as long as you're kind of just trending under this the Bollinger Band, you haven't really gone so parabolic where the market needs to snap back. It's usually when you get like a candle completely outside the upper Bollinger Band and you get the overbought readings, then you'll have like these periods where you'll have pull back for a couple days, you'll pull back for a couple days and work that condition off. And so just got to be mindful of that as you get into it. I make this mistake too. It's really easy to like start getting too cute with the setups and start thinking like, oh, I have to short this or I have to do this because, everything is up so much. If you start thinking everything is up so much, start finding the setups that are not up so much, and we'll start to get into that. Let's take a look at some of the other market indexes, then we're going to kind of go into some setups that I think are going to be pretty good. The SPY just came out of a consolidation just recently, and you can start to see like it's just trending up outside, just hugging its upper Bollinger Band too. It's extremely overbought, but it doesn't necessarily mean like it's going to come snapping down. You could just slow the rate of descent or start to consolidate. And one thing to remember that bull markets that are a little bit different than bear markets, when you have bull markets and you go sideways and you have a series of flat days, you can still have a lot of breakouts. Oftentimes in bull markets, those days where the market like moves very, very little, you'll start to see individual setups that are really powerful just start breaking off. So after you get a big run, like if you start getting some sideways days, that's totally cool. Like you'll still get some breakouts on those type of days, and just something to be mindful of. And you can see even on the IWM, like we've come out of this big range now, and we're starting to trend up. It's 9 EMA. It was down a little bit today, but as long as it's kind of hugging this 9 EMA, like this is also good, right? And this has been trailing the rest of the market here. But in general, like nobody's really trading IWM stocks anyways. So it's just something, right? It's like the Dow. Nobody's really trading any of the names inside these. So they matter a lot less, right? Like it doesn't really matter what's in the Dow, because unless you're going to trade like General Electric or whatever's in there, who cares, right? And so the market's more governed by the SPY and the NASDAQ and everything else. So just the different things to think about. So let's take a look at some of these other market indexes. So you can see, I always like to do a 5-day short when I'm looking through the market. So I have a list of indexes that I want to follow, right? So I can get an idea of what's happening underneath the hood of the market. Then I want to do a 5-day short, and I like to look at 30 days, 90 days to see the longer term trends. But as a short-term trader, a day trader, swing trader, but even my swing trades are going to be relatively short, right? 3 to 5 day kind of momentum thrust. We want to do a 5-day short and really kind of see this. So you can see, right, this has really been leading the way, the SMH, and that's a good sign. Semiconductors always tend to lead the way when the market starts to rebound, as they are probably the most like intensive out of the tech stocks in terms of capital needed to run the business. So they fall the most when the market falls. And then when the market ramps, they tend to lead the way. So this is actually a good thing. It is up a lot of days in a row, but right until you get like these kind of candles completely outside the upper Bollinger Band, I wouldn't consider it parabolic or anything of that nature. So just kind of keep that in mind. The DRIV ETF, this is like your ETF that's got the Teslas and these kind of names in them. You can see now this one is getting a little bit parabolic. You can start to see these things are really getting extended. And, that makes sense because, right, Tesla's been up about 13 days in a row. And so when you get these kind of runs, like that's probably going to need to take a breather. Now, does that mean like it's like some epic short now? Like if it pulls back, like it may just kind of back and fill some of this area. And so you don't want to like necessarily step in front of it too much. And if you start to see like all these other indexes are starting to trend too. So like this is Brazil, you're riding up the 9 EMA, right? Even the ARC has been trending up the 9 EMA. These are your Kathy Johnson stocks, right? So your Kathy Johnson stocks have been also pushing in, and that's your signal of speculative names. So when you start to see the Kathy Johnson stocks start to push, right, that's also telling you that risk is on in the market. And these are good signs too. And you can start to see if it really starts to push over this 46, you have a lot of room to go. And it's when this actually breaks, that's when probably you're going to start to see some real shenanigans happen in the market, and where you'll start to see like your kind of $8-10 stocks starting to rip and rise. So just some different things to kind of keep in mind as you start to go through this. We don't have any signal yet that the market wants to roll over. Let's go into like just some scans. There's some good looking names here that I think we want to be aware of. When you look at like the market, right, you want to kind of study. I always like to do like a 90-day short, and you want to kind of study like, okay, what are the stocks up the most the last 90 days? And what type of patterns, like what kind of themes are coming out of them? That will give you an idea of where you want to start to allocate capital properly, because as retail traders, right, we don't have access to hundreds of millions of dollars, right? We have to take our thousands of dollars, $10,000s of dollars, hundreds of thousands of dollars, right, and allocate them in the most efficient way possible. So we want to be in the best, in the best names. And so one of the things that you can start to see is like if you go 90-day short, and the filter I use on this, it takes away basically all the 30 stocks. I do price history 10. You could change this to 8 if you want, like a little bit cheaper ones. I tend not to trade like $2-3 names because they just don't give me the liquidity I need. But like if you go into this, you start to see, right, some themes starting to merge. Like, okay, APLD is up 300% the last 90 days, right? This is basically an AI themed stock. CVNA, right? This is a big bottoming. This is the pattern that's been working pretty much. This is the go-to pattern in the market so far. One of the themes that's been happening in the last month is any stocks that have been down like 80-90% off its lows that have been consolidating for 6 months, a year. When they start to come out of that, that's when you're starting to get these kind of explosive names. Like this company is probably going to be doing dilutions or bankruptcy, but those are the names that actually end up being like the hottest names possible because they end up being the cheapest ones, right? Like SMCI is another one. This has been actually running with the AI stocks. NNOX, UPST, this has been running with the AI stocks too. So if you start looking at this thing, right, this was like $400. You have a 1 year long base, and now you start to come out of that. And so these are the type of names like you want to be a part of. If you're coming in and trying to trade names that are like mid-range, then they're not going to be as effective. Like this pattern's been going like clockwork on pretty much every single kind of stock. So always study these kind of 90-day momentum stocks. It'll give you an idea of really like what type of patterns are working. See this PLTR, it's another one, $30 stock, right? You base out for a year, they announce their earnings, and then right, it goes on this rampage and you start to trend, right? So this thing drops down like 70%, comes out of the base and starts to go. So that's the theme in the market. And so we want to be kind of mindful of that, right? Even the stock AI was $200. Like everybody, it looks like it's so expensive now at $40. Well, it doesn't really matter. Like if you think about where it was in the relation and the theme that's been happening in the market in terms of the type of setup that's working, which is, right, stocks that are down 80-90% off its lows, you get the big base, and then you start to come out of it. Now we start to understand like, okay, this is where like the flow is coming into the markets, and just something to be mindful of. And then beyond that, right, you can see you've got like big cap tech coming with like earnings breakouts and so on and so forth. So let's start digging into some names that I think could have the potential to start making these kind of moves. Let's start with some of the bottoming names, and then we'll start to go in from there. Mr. Johnny, it is a high tide raises all boats, but this is just the natural phenomenon of how really like just how markets roll. Like there's 4 stages of a market cycle. You have your accumulation, you have your rundown phase, which is like your bear market, and then you have an accumulation phase, which is like your sideways grinding market, where like you're just evening out, where buyers and sellers are at equilibrium, but you don't have any catalyst to really get anything going. And so you just grind out all the sellers, but there's not really any buyers left. Sellers get tired because there's nobody left to sell because stock is down 80-90%. And then what starts to happen is like you start to come out of these ranges. And when you do that, you start entering the next phase of the market, which is like your run-up phase. And that's very common with pretty much like every kind of setup. And so that's what we're really seeing right now. And this happens after every bear market. If you really think about, the crux of the bear market, it's been over for a long period of time. Like if you think this is the QQQs, the bear market started in 2021. Like most of the stocks started dropping over here. They were already down 30-40% while the market was in distribution. And then I would say, like, if you look at from June to now, right, like we've been really in that kind of same range here for long periods of time, right? And so the bear market's been over really probably, even though it wasn't doing anything, the actual selling of the bear market has really been done since like October of last year, right? And now since January, we've been essentially trending. So that is the natural, that's just the natural course of all markets. So I wouldn't worry too much about anything else, except right now there's trends, and then these bottoming in place are getting picked off like one by one. And we want to be kind of mindful of them, even the ones that are turds, as long as they're like actual companies, right? Like I'm not talking about your like 30-40 cent stocks that are like pump and dump stocks, but like actual companies that have been around for a little bit. So let's go into this. So a couple names I think can start getting picked up over here. Like I've, I run these kind of scans all the time, but you can see like something like OSTK was like $100. And we've been basing out now for a long period of time, since all of January. And you're finally starting to come out of range on this bad boy. Like this is, right? This is going to be something like, as it starts to, creep, if it can build over this 200-day moving average, like we've got ourselves like a nice location on this bad boy. And, you can use your 9 EMAs as stops and so on and so forth. So I think like these kind of names are going to probably come into play. I've got a bunch of this open in my IRA for a swing. Like this was a $40 stock, and it's been really basing out in the dollar range for quite some time. You can see like it's at a key inflection point over here where it's like starting to push out of this thing. Now this thing is a big turd, like it used to be a SPAC, but it's one of those names. Like this is the kind of name that we want to be really looking for. So like I like this kind of name too, because you've got a lot of upside on this. It reminds me a little bit of like a CDNA. It only take like a little spark to get something like that going. So like just be mindful of these kind of names. There's a whole host of these bad boys that can start popping like one by one. Another one I've been stalking for a while is this Fitch. Like it was $80. Like, you had a recent earnings breakout over here. So this is the most powerful setup that's been happening in the markets, like on these cheaper names. When you see the gap like this was a gap on earnings. And then after like the first consolidations, like these things start to build. So I keep an eye on this one. If it starts to build over that 200-day moving average, like you're going to have you've got a big base here. It's like you've got very, very, like you're still pretty close, right, to the bottoms in relation to where it's been. And so these are the type of names like you really want to be a part of, right? Like this Big Lots. This was $90. Like you started to build out this base here, and you can start to see like the volume has been really pushing into this bad boy. So like this name like is coming out of this consolidation. It had a big pop yesterday and then a very powerful rest day. This is what we call an inside day. An inside day is when you get a big range day and then you get a tight range day inside that previous day's range. That's actually really powerful. If this thing starts to build tomorrow, goes red to green, right, and starts to push out into this 8s, like you're going to have yourself a little breakout over here that could start to really get smoking. So keep an eye on this one at 8-ish. Like I think that one's got a good chance on it. Rivian, right? Rivian is a huge turd of a company. These guys make the EV companies. This was $200. Now, this thing has been sitting there marinating in that kind of 13, 14, 15 range for quite some time. So now you're starting to do is you're starting to test out this level, right? As you test a level, every time you hit it, you make it weaker. And the setup becomes more powerful. Stocks, they get their power from consolidation. They get their power from basing. So as you start testing a level, what you're essentially doing is it's like a pressure cooker. Like you're testing it and you're testing. Every time you beat down that door, you're weakening it. So if this thing starts to bust through this, let's say it's about 1560. If we look at an hourly chart, you can kind of look at it a little bit cleaner. Well, now you're going to start to really 1575. You start to bust through this bad boy. Now we've got something that's got a little bit of a goose and a gander. And you can see it had a big move yesterday. And then today we did kind of a classic inside day. So yesterday went from 14 to 15. The inside day setup has been the most powerful day trading setup in the market. The inside day setup has been, for day traders, the most powerful day trading setup in the market. It's like where you get the big thrust, then you rest for a day and chill. And then on that third day, when you take out the range, they start to cook. Like this has got some money in the bank on it if it can start to push through. So kind of your first triggers tomorrow will be the red to green. But ideally, like you need to take this out 1540 out. That should trigger the swing and get this thing going. And then you've got a lot of upside. You don't have really any resistance till $20 or so. Now, once again, like this thing is a turd. But turds are flying, right? In certain markets, shit flies, and we're getting into that bad boy. So I like this name a lot. This is something to keep an eye on also. Oh, yeah, they're turds. BYND, fake meats, right? These things are probably poisonous. But this is another one, like it's been sitting there, right, in this range for like 14, 15. And then now you're starting to come out of this thing. You had a big run yesterday. Inside day today, if this thing starts to go, like it goes red to green tomorrow and takes out this range, like I think you got a little bit of upside in this bad boy. Like this could be hotter than a goose's caboose also. Good. Yeah, and like you see, like some of these names like Plug and some of these battery names are also starting to pick up some steam. They don't trade as well, but you know, you got that same kind of setup on it. Good. Now let's go into some earnings names that I think are consolidating that could give us a little bit of juice here. So, you know, one of the things I like to do is just run like a 5-day short to see like what are the stocks that have just recently moved. And what we want to do is just see if any of them are starting to consolidate and possibly, you know, set up for these kind of base breakouts. So you can see here, like something like this I think this thing is like ready to party. It's already had a couple days of upside here, but if it rests for like a day or two, you've got yourself like a nice level that's starting to develop on this. Look at all the volume that's been coming into this thing. It usually does about 4 or 5 million shares in volume. Today you're pushing 36. Yesterday was about 25, and you can see the day it started to make its move, it was at 50. Like you've got yourself, this thing used to be $250. Like it's starting to really come out. Like this range goes for a long time. If it starts to come out of this bad boy, like that's a near perfect setup, you know, especially with all the liquidity that's pouring into this bad boy. AI, right? AI also had an inside day today. So you had a big move on 37 to 45. So you had an $8 move. You had an $8 move yesterday. You had an inside day. Yet today. This is prime time. Like if this thing starts to push through, you break 44, then 45. Like you can see, like you're really coming off to the races on this boy. And you know, once again, like this thing was right to $100. Like this company's probably a big gelatinous turd too. But that's the setup, right? That's the setup. EXPI. You can see this thing had this gap over here. It had a gap over here on some news a couple days ago. Now what you're starting to do here, this is a real estate company, is you're starting to build out a nice, just tight flag over here, over the 90 EMA, the old breakout spot. And this is a big, powerful move. Look, this is a 1-year base. It started in April of last year. And now it's finally coming out of it this year. So you got a 1-year base. This stock used to be $100 damn, right? So now, like you're starting to come in, you made your initial thrust as you're starting to come out of range, but now you're starting to marinate, right? You're starting to tighten that range and build out some compression. Whew. Like if this thing starts to push, I would give it maybe a 20 trigger, give or take. And you start to push out of this thing, like you've got a next leg coming, and this has got a lot of upside. You got a big ass base on that bad boy. NVIDIA, this has been a daily trader for us. So you can see this is the simple setup, right? Earnings breakout, the consolidation, and a go. And that's what happens. Like, don't be afraid when you see these gaps and like stocks like pop up like 50, 30, 40, 50%. Just wait for that first consolidation. Let the EMAs tighten up. And when they start to come out of that, like you start to really, really push. Man, I had so much of this thing in the morning today. Well, I was doing the options contracts on it, but shit. I had the 410s and they were up like 200%. I sold them early. I sold them into this thrust here. You know, I got them at like $7-8 or whatever. I sell them in this thrust, but I forgot to reload here. And you can see like these things start to really get randy. This thing goes from 8 to 21. Like NVIDIA is a little bit tricky on trading on with shares because it's so damn expensive and there's a spread on it, and you know there's almost too much liquidity. But like the options contracts actually trade really, really well, and you can put a lot less capital, but like you can catch like some really, really big moves. So when you see some of these, like I do the same with Netflix. When you see some of them that get into like $400, $500 range, like don't trade the shares on them. You can trade the options on them. It's just a little bit easier, smaller amounts of capital. But I find them just a little bit easier to trade because these things are just so wild on a per candle basis that like you don't want to even get, you don't even want to mess with those things. Oh, this is a good one to watch too. BRZE. The stock popped up here on news a couple days ago. About 4 days ago, the stock popped up on news. You can see like you're coming out. This was a $110 name, big base. You're starting to come out of these ranges. So you come in out of this earnings day, and now you're starting to just go sideways here, right? Let that 9 EMA catch up. Like this is the setup that's been working every single time in the market. Let that 9 EMA catch up. It may need to test it. Once it does, like you'll build out some level, some flag, and you can come out of it and you'll get a secondary run. The picture perfect like look of it, how you want to really think about it is, okay, so that's the options chart. You just have to do options chain on your TC2000 and just add it in. There's not anything, it's already set. So how you want to look at the playbook for like a BRZE, right, is kind of like this PLTR. So like PLTR, it had its earnings day here, right? So you can come in as earnings that goes from $7 to $9, $10, right? So obviously you can't chase it up like after 4 big days and it's almost double. But what will often happen is like you'll start to marinate, right? You'll let the EMAs catch up here, let the 9 EMA catch up. And what will start to happen is you'll start to build out these consolidations where you can start adding it either on the 9 EMA or on the breakout. I like to always be in a little bit early, and then you get the secondary push, right? And this specific setup, I mean, that's been the go-to. That's been the go-to in this market. Like anytime you've had an earnings break, gap up, consolidate, let the 9 EMA catch up, then that's the shred. And so this is, you know, this market's great for day traders, but it is a swing traders market. You know, it pays to actually be holding these things, because when you're day trading some of these things, I mean, you might sell it for 20, 30 cents, 50 cents, but then next thing you know, you turn your damn head and it's up 30, 40%. And you're like, what the fuck, right? Like, why did I sell it? We're in that market phase where anytime you look at a stock, you're sitting there thinking like, fuck, why did I sell it? So same thing, right? You gap up here, you're pulling back into the 9 EMA, you start to grind in. Now you start to come out of these ranges. And so when you see something like a BRZE, right, that's the same setup you want to be looking. Anytime you see any of these earnings gappers, right, you want the pop, let the EMAs catch up, and then you shred it when it comes out of it, just like PLTR, just like NVIDIA. You do the same thing right on this BRZ. AI is doing a similar move, right? You have this big thrust off some news, comes back into the 9, it starts to build, and now you're thrusting out of this. That's the money in the bank setup right now. But guys, did you find it? Yeah, you just do options chain. Hey, mother lover, where you been lately? Where you been lately? Hot damn. I've been waiting on this GTLB. This was an earnings gapper too, like you're seeing the similar type of name. I need this thing to pull back. It's just grinding higher right now. The float on this is really tiny, so it's not giving it a pull yet. But at some point, it's going to start to pull and marinate a little bit, and that's going to be the spot to do it. Couple other names to keep an eye on. I did miss you. Couple other names to keep an eye on that I think are ready to look, right? This crowd, that big move here, then it gapped down on earnings and actually reversed. So this was its earnings day. And now it's just been marinating on its EMA. You can see it's just like kind of marinating here, right? And you're building out essentially a level. I think probably 154, 155, you know, will set this thing loose. And if it starts to come out of that, you're going to see a 163 pretty quick on that. Then you'll see like what's going downtown Julie Brown on that bad boy. That thing is looking hot. Good, good. Anybody got anything they're looking at that they want to look at? Let me see here. Yeah, I'll send you guys this list too. Yeah, I think this FSLY, I got this one too. So this was 130 bucks, right? You're starting to build out a big base here around the 18. If it starts to push through that, good to go. So Tesla is up too many days in a row to really buy it up here, Evan. You know, you're going to have to let this thing chill out a little bit. I mean, it's had an incredible run, right? 150 to 250. I mean, it doesn't mean it can't go higher, but this is one of those ones that really needs a consolidation or a small pull. You know, even like if it went sideways for like, if it went sideways for like a week or something, you'd have yourself, you know, a much easier way to kind of manage the situation. Right now it's just too extended. Does that make sense, brother? Thanks, Joe. Evan, let me take a look. SoFi. Yeah, SoFi, look, this thing has doubled in the last few days. This is another one of those base breakouts. Remember this pattern, guys, right? This thing is 24 bucks, gets down into 5. You build out a base here for a long period of time. Always look for the level, and then right once you start getting over it, you start getting these incredible explosive swings that you can come into. So this is a good one. It just needs a pullback, you know, probably a tap back into the 8s would do it. You know, right now on the hourly, it's just kind of trending up its EMA. So it hasn't shown any signs of cracking, but you can see it's gone straight vertical. Like this is probably one of those ones at some point, if it has like a big gap up or something, it'll probably get shredded down a buck or two relatively quickly. Let me see, MVIS. Yeah, MVIS is a turd because this is more of a pump and dump stock, but it did do a nice base breakout over here. You know, this is probably one of those ones like I think the pullback on this one is just too steep. So what I mean by steep is like when you have pullbacks on stocks, you want them to be orderly. You want them to be crisp and orderly. When like this thing is down 30%. So when you start and when you have stocks that are pulling down that aggressively, you can't really manage the risk or anything like that because, I mean, they're essentially rolling over, right? When you have a pullback, like you want something more like this, right? Like see like this like it has like a nice 5-6 days here, goes from 26 to 40. And then like you orderly pull back, right? You orderly pull back and you don't violate your supports. And so when you do that, now like you've got yourself a much nicer spot to actually, much nicer location to try a pullback trade. Where if you get up into, you know, you get up into try to bounce this thing, it gets a little bit tricky because it's not even respecting any supports. Nicola. Hold on here. Let me see, Nicola. Yeah, so Nicola is also making a nice move, but it's already doubled here. So you got to be careful. Like you need this thing to pull back and right, like you can't buy it up here because it's already doubled. But this is something, right? If it starts to consolidate, it starts to marinate a little bit, then you're going to have yourself a good location. You know, I'd keep it on watch for sure. Let me see, Costco. Yes, Costco is something that like is starting to come out of range. I was looking at this a little bit earlier, about a week or two ago. It's a little bit of a grinder. It doesn't move like NVIDIA where it can move like aggressively, even though it's a higher price stock. So think about like when you think about like a stock's movement, Evan, right? Always look at ATR. So what ATR means, it's your average true range. So the ATR on Costco is $7. So it's not bad, but it's a $500 stock. So the percentage ATR, so the percentage it moves every day is 1%, right? Is 1%. But, you know, if you see something of a similar price range, right? Like NVIDIA has a 3.5% daily ATR. So it's a double from Costco, right? So more than a double. So it just moves a lot. It just means it moves slower. It doesn't mean like it can't be bought or anything like that. What it just means is like you can't expect it to do what it can't do, you know, from its share structure and just the way it moves. So this is something like you can make 15-20% on it, but it's going to take some time, right? It's going to be a little bit more of a grinder, and it'll probably be more of a safer name, but it's just something that's going to be, it's going to take time. Nike. Yeah, Nike looks okay. To me, I'm unfamiliar with how to do this one because, it's like remount the 200-day moving average, but you're coming back into this like big range. To me, like, see, this is like a penis in between us, right? Like you're not near the lows, you're not near the highs, you're like kind of right in the middle. So that one's not, it could go up just because the whole market's going up. But I don't know if that's like my ideal setup. If I'm looking at setups and trying to catch something explosive, that's not really the one that I want to be, right? That's not the one I want to be a part of. Hey, this Twilio does look good. Whoever just sent that. This thing was $500, right? So, you've got yourself like, first of all, you had this huge thrust. Now you got a consolidation. Like this thing, if it comes out of this zone, whoever sent that, it's a good look, by the way. This thing's pulling back here, and then if it kind of comes in for the third round, like that could be pretty explosive. You don't have any resistance on this till 80. You can see this 80 spot's pretty big. So it doesn't have any resistance on this spot till about 80. This is, I would say this is prime time. Prime time, Mr. Joe Smith. Good eye. Shop, I think, is more of a day trade setup. Like you are coming out of a big consolidation here, but it's been kind of grinding along. The range is not compressed enough. It does look like a trender, and you are still like 60-70% off its highs. Just not as explosive as the other ones. It's a great day trader, by the way, though. Like this thing was on my day trading list every day. Wolf. So Wolf looks okay, but this is a little bit more of a grinder too. Like, I don't know if this one has, I felt like it didn't base enough. If you see the ones that like have really been cooking, they were going sideways for like a year, right? A year and a half, like these kind of things. This one is like a little bit, I think a little bit different, right? Like if you see something like this, it's been going sideways, right? For so long. So you just have like a lot bigger base. Like an OSTK's got a lot bigger base on it. You see this U's got like a year-long base, right? I think UPST is something you want to keep an eye on, but I don't think you can buy it up here. Look, it's right into resistance and it's already had this huge run with no rest. This is like the quintessential one that can get you in trouble. It needs to just marinate here. Like if it can like pull back and marinate, like that would make it sick, because if it can do that, and then like you do have this spot here at about 38.40, it is at a spot, right? It is at a spot here. I've been staring at this thing, but like if it can just marinate here for like 3, 4, 5 days, that would really make it a lot more powerful, right? Remember what I was telling you, stocks get their power from their consolidation, from their basing. And so when you have that marination, then you're going to have yourself a lot better spot on this one. Now, if you're already in this, like if you're already in this hill, then you're good. Like you're just trending up the 9 EMA anyways, like then you're good to go. Guys, think explosive. What did we just talk about at the beginning? 2 themes. What are the themes in the market, right? Stocks that are up 80, 90% off the lows, big base. They usually start with earnings. Like, see this gap here? This move started with earnings. So, like, this is an awesome name because, like, the move started with earnings, right? That's what triggers these things. So, like, that's a good one, right? Like, that's what triggers these things, right? Like Palantir. It got triggered off earnings, and now it starts to ride. And you want to always hit the first consolidation when it comes in after that. So UPST looks good. If you're in it, great. If you're not in it, wait for a consolidation or some better way to manage your risk. It'll make it a little bit more explosive. KNX, I don't know about this one. It's a trucking company. This looks like a penis in between us. Like you're just sitting there. You're just sitting there in a range. There's no worse place than inside a range. What I mean by that is like when you sit inside just like a range like this where you're not at the lows, not at the highs, it's like sitting in the back seat of your buddy's Volkswagen Beetle. Like you're right in the middle, right? You're not left nut. You're not right nut. You're definitely not shotgun. You're right in the middle in the back. And that's the worst spot to be in, right? Not to mention it's cramped. So you don't want to even go there. I think there's other ones that are going to be a little bit easier. Vish, what's going on? Target to me, I'm not sure on this one either. Not enough for me, not enough basing. Like to me, this is just like could be bear flag or whatever. Good. Yeah, I think these ones. So we got OSTK. I think this U's got a right spot. Whoever sent that Twilly Ho. Right, you got a big base over here, and you got a flag coming out. Put a 70 trigger on that boy. Some more speculative names, because this is a retail stock, so it's not always as fun, right? There's big lots. I think you got to set up on open, right? This is the tour de jour setup. Rivian, watch that 1575, BYD, FSLY. We want to come right up on these things. And then we're good to go. In terms of the earnings plays that need consolidations, right? We want to keep an eye on, right? Stuff like this Breezy. This one had earnings out. The gap, sideways, show and go. That's the most powerful setup in the market, right? You got a gap, let the EMAs catch up, and then you get the show and go, right? Gap, let the moving averages catch up, and then you come out of that range. That's been the moneymaker setup beyond those big basing patterns. So there's two themes that you want to be watching for, right? Number one is the gap up on good earnings or earnings surprise, the sideways consolidation, let the 9 EMA catch up, and then you bust out of it, and then you have these bottoming plays, right? These bottoming plays, right? Like the CVNA types that have been like so beaten down, and then you're starting to come out of them. Mother Lover, yeah, we usually do. Just hit the live chat on the Bulls on Wall Street homepage. Tell Kevin, he's always on the live chat. Tell him you talk to me. He'll give you one. Bill. Yeah, so this is also the quintessential, right, setup. So you had the gap here. This was on earnings. And then, right, you had the sideways consolidation and now a go. Like that was a good one right there. Mandy did the same thing. See this move right here? I had this a couple of weeks ago. This was the day of the earnings. Like, see the gap? Then you get the consolidation, let the 9 EMA catch up. And then now you're starting to trend. And it looks like it's consolidating again for like another run. Not a good day trader because it doesn't do enough volume. It's more of a swing trader. But right, it's got some good range. It's got some good old-fashioned, God-fearing Christian range right there. All right. Anybody else got any questions? I got to go and do the Lord's work somewhere else now. Let me see rent, buddy. Yeah, rent might need a little bit of more work too. Disney, no pattern. So look, it is down a lot. But like, see, like it's under all its MAs and it's in a weird spot. Oracle had earnings a couple days ago. So like this gap here was on earnings. So at some point, it's just going to need to consolidate. If you're day trading it, yeah, like today I did a red to green setup. If you're day trading it, like these things that are extended, you can keep day trading them. You know, like you can see here, like when red to green setup is when you open up weak and then you pass over the dotted line. So you literally go green on the day. That's your trigger. Put the stop loss at the bottom of the candle and you can catch yourself some nice shreds. The red to green setup is we're working. I mean, that's the go-to day trading setup in a hot market. You know, I did the same thing on NVIDIA today. So like NVIDIA had a big, right? It's coming out of this range. So see what happens here at the open? Evan? See, like it opens weak. So it's like down a couple bucks on the day, passes over the dotted line, right? So it goes red to green on the day, put a stop at the bottom of the candle. So you're only going to risk like, I had $1.50 stop loss. So you don't have to be too crazy on it. I had $1.50 stop loss on it. And then you're off to the races. Now, like a piker, I think I sold my last shares at like $4.19. I didn't hold any lottos because I pikered it. I, Kunal Desai, am the president of the Piker University. Yeah, Luch is my boy. Always, for life. Yes, I'm sadly the president of the Piker University, but I always be shredded. Coo. All right, folks, I got to go do the Lord's work in the devil's playground in a little bit. I'll see you all. Hey, Tobias, there could be a sell the news event. I mean, theoretically, it would have came today. I would just see if you have like a gap up in the Qs and then it rolls over, goes green to red, and you start to build under it, then, take a look, but I wouldn't try to step in front of it. All right, peoples. As always, it's been real, it's been fun, it's been fast. Peace in the Middle East, my friends. Hey, Ice. Yeah, I'll get with him. Yeah, he's busier than a motherfucker.